Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us at the MarketSite studio, we have Peter Brown, Product Manager of Collective Investment Trust Solutions at State Street. The product team establishes the strategic direction for CIT servicing, develops industry intelligence relating to CITs, and is an SME leverage for client meetings, and drives the product and technology strategy as they relate to CITs. Peter, it's great to have you with us. Welcome to MarketSite. And let's talk about CITs, or tax-exempt pooled investments. Can you explain a little bit more about them and the history?
Sure, absolutely. So CITs have been around for nearly as long as mutual funds. They both date back to the 1920s. And one of the issues has been that they have some stigmas and restrictions that have started to be lifted. I think the important part is that they're very similar to mutual funds. And you mentioned they're tax-exempt and they're pooled investments. So these are retirement plan assets in a pooled strategy, so multiple investors in one strategy. For the portfolio manager to the end investor, it's nearly the same experience as a mutual fund. For the operations, a little bit different. Today's CIT is something that an operations and asset manager should be considering because they do offer an experience that's very similar to a mutual fund that everyone's very familiar with. The contemporary CIT can provide daily valuation, it's got annual financials, and it can even have a ticker symbol, which is listed on Nasdaq. So a mutual fund is something that a lot of asset managers should be considering for their future.
And as you'd mentioned, they are similar to mutual funds in a way. You have fewer administrative, legal, and regulatory requirements on a CIT. What are some of the challenges associated with them?
Yeah, so it is often cited that they have fewer restrictions and regulations to deal with, but they're still ERISA assets. So they're held to a very high standard, and they're regulated by the Department of Labor. They do offer a little bit more flexibility to the portfolio manager, who can invest in less liquid securities that a mutual fund is a little bit restricted on. But with that in mind, it's important to work with a team that understands them and understands the unique governance and operations of a CIT.
What would you say to a company that's considering launching a CIT?
Yeah, so there's some certain things to think about related to the legal, the financial, and the regulatory. And there's also this trustee function that's unique to a CIT. And the trustee function is something that is often done in-house with the asset manager. It's also something that can be outsourced to a third-party trustee. And that's an emerging trend in working with large, established third-party trustees who can really understand the nuances and operations and governance of a CIT that's a little bit unique. And in today's day and age where investors are looking for every basis point, it's worth considering a CIT. Additionally, there's a decision around a ticker symbol has emerged more recently, and that's something that it gives the searchability to the end investor so that they can compare and contrast various different options.
And we've seen growth with CITs over the past decade by defined contribution plans. What's your outlook for 2023 and as you look ahead?
Yeah, so there's never been a better time to launch a CIT. There's regulatory tailwinds that are coming up in the future. And also the opportunity to work with third-party trustees removes a little bit of that burden that some asset managers had thought about in the past. A generation ago, the mutual fund did everything for everyone, and it was a great option for a lot of shareholders and a lot of asset management firms. Now it's worth considering CITs because of that cost effectiveness. And as more assets are in retirement plans and employer-sponsored retirement plans, it's worth considering a CIT as an alternative. Additionally, Congress is starting to pick up on this and is looking to open CITs to 403(b) plans. So today's CIT offers that daily valuation, annual financials, and it can even offer a ticker symbol for searchability. So the contemporary CIT consists of what shareholders are looking for, and for asset managers that have looked at CITs in the past for their way to grow, there's never been a better time to launch a CIT.
All right, Peter, we appreciate the insight. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.